All right. My name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping you out of jail. So today I wanted to talk a bit about cash basis and accrual basis accounting, specifically for tax purposes. So I had ran into a situation, and I had done a video on this before where I talked about the differences between cash basis and accrual basis accounting. And I spoke about the differences with that and the impacts that it can have on both your taxes and your financials. So just to give a quick recap, when you do your business taxes, I actually you could do this for your personal taxes as well, but usually you see the difference here with businesses. So when you report your income and your expenses on your tax return, you actually have two different ways that you can do it. And for the most part, so you actually have two different ways to do it. You have your cash basis and you have your accrual basis. And essentially the main difference is when you report income and expenses. So if you are reporting your taxes on a cash basis, any income that you report or revenue, money that you bring in, you report that on your return when you actually receive the money. So let's say that you bill for your work. So let's say you perform the work and then you send the bill out and then the client then pays later. So if that were the case, you record those sales as a part of your revenue when the client actually pays you, right? So now take that, and that's if you were accrual basis. If you take that same scenario, you will report the income as soon as you bill the client and perform the services, regardless of whether they actually paid you yet or not. You would report that income as soon as you perform the services and sent out that bill. So that's how it works on the income side. On the expense side, the two differences are as far as when you can record your expenses. For a cash basis, you would report your expenses when you actually cut the check. So you pay out that expense, you record it as an expense on your taxes. If you are reporting full basis, you would actually record that same expense once you say receive the bill. So let's say that you actually get bills from folks and you know that you have to pay it, but you just haven't paid it yet. So as an accrual basis, you would turn around and pay the bill. You would report that expense on your tax return the minute you get the bill, even though you haven't paid it yet. So that's really the big differences. And depending upon the method that you use and your circumstances, it can create pretty wide fluctuations as far as what your taxable income would be. Now, I recently had a client where they were relatively new to the business and they were reporting on an accrual basis. They were a part of a partnership that was reporting on an accrual basis. And they ran into some issues here because with this accrual basis reporting, there was income that was reported because they were due to receive it, but they had not received it yet. And it was a pretty large chunk of revenue. So as a result, their tax liability was a lot higher and they owed quite a bit of taxes on money that they had not received yet. Again, based upon the accrual basis, your circumstances and the method can be the difference between owing quite a bit, owing not a lot, owing quite a bit, and not having the money. It can definitely create some issues there. So with that said, you have the choice to choose which one you want to use. Now, at least at the beginning. So first start your business, you have the option to choose which method that you want to use, the cash or accrual. Now, once you file that first return, you're making your claim as far as one basis to use. Once you choose one, you can't easily go back and forth. You can change. However, once you establish a method, and that's usually established, file, usually with that one, if you file two returns using that same method, then you're considered claiming that method. So you can't jump back and forth between methods as it's convenient for you, but you can change. But if you change after you've already made an establishment, you actually have to get permission from the IRS to change your method. So if you were filing full, say for the first year or two, and then you decide that you want to use cash basis because you figure that may work better for you, you actually have to file a form. I think it says 3115, I believe, but you actually have to file a form with the IRS to get permission to change methods. So pretty tough to change once you already establish it. You just can't jump back and forth each year as it seems convenient for you. So you really have to think about what your situation will be as far as what the cash flow situation will be to see what may make the whole sense for you, given your circumstances. If you're in a situation where you receive a lot of cash up front and then you have to perform the work, then an accrual basis may work a lot better for you. But then if you know that the cash comes in, cash comes out, you don't really have much receivables in the sense of you don't bill people, you just bring cash in. Well, that kind of really just puts you automatically as a cash basis taxpayer. But you really have to think about what works best for you. So you still, again, you have the choice, at least initially, but it's a bit more difficult to change once you start establishing. And now there are rules where you don't have a choice as far as which method that you want to use to file. So there are some rules where, depending upon your setup and your entities, you don't have a choice. You have to file accrual basis. So if you are either a C corporation, a partnership that has a C corporation as one of its partners, or if you are what the IRS defines as a tax shelter, you have no choice. You must use the accrual basis if you are one of those three things. Now, there are exceptions. One big exception is what's called the small business exception. So if your gross receipts or your average gross receipts for the previous 3 years, if they are less than $29 million, and that's adjusted for 2023, but it's adjusted for inflation, so it goes up. But I think as the last time I checked, it was 29 million. Then you get the small business exception and you don't have to follow that rule with filing accrual. You can file whichever way you want. You still can file accrual, but you do have an option to file cash. So that just makes life a lot easier for a lot of small businesses to keep track of accrual. And then it allows you to bypass having to track everything on accrual. So I know that applies to a lot of the businesses out there. So you don't really have to follow that. But one exception would be that does not get the small business exception is the tax shelter that I mentioned before. So if your company is set up as a tax shelter, then either way, it doesn't matter how big or small it is, you have to use it. Now, the IRS defines the tax shelter in this instance as its limited partners, essentially limited partners who are absorbing a loss. A company that generates a loss, if 35% or more of the total loss are allocated to partnerships or an individual or individuals who are limited. So basically, if it's a passive investment and 5% or more of the losses are allocated to folks that are invested in this passive activity, then it's technically being a tax shelter. So trying not to get too far in the weeds there, but for the most part, you really just have to pay attention to the $29 million. So you do less than 29 million, then it really doesn't matter. No, it's probably more companies than not. Those are the small exceptions. But the main takeaway points here is that you really want to be mindful of the basis that you're using and know that you just can't flip-flop back and forth between bases. So you have to get permission to do it. So hopefully that was helpful. If you have any more questions about this topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help. All right. So that's all for now. And I will talk to you on the next one. Take care.